Hello, everyone. Hello. So, the week is starting. We are expecting the PMI and the CPI, a bunch of other things this week that's going to make it extremely volatile. Today the market is kind of very quiet. As you could see in this chart, the market is not doing anything, right? Okay, so what do we do? Well, what we're going to do today, we're going to be talking about, let me show you the chart. Okay, what are we going to talk about today? Today, we are going to talk about two things. The first one that I want to show you, and remember when I told you, remember, the goal for this channel is to educate you, right? We're not trying to predict the market, right? We're not trying to predict the market. We're just trying to take advantage of it. And how do I take advantage of the market? I kind of guess or evaluate what everyone is kind of thinking about based on what I see, what I hear, and based on my evaluation, right? So what does it mean exactly? Well, it means that what you want to do is you want to buy when everybody is selling and sell when everybody else is buying, right? You want to understand the player. You want to get a lay of the land. That is extremely important, and that's exactly what it is that I'm going to do for you. I am going to educate you, right? I'm not going to tell you. I'm not going to predict anything. I'm not going to tell you that you're going to be able to retire in NVIDIA if you buy $150 and you'll have $1 million. It does not work that way. It only serves the people that you're listening to, right? So let's be positive here and let's see, how can I take care of this market? What can I do to take advantage of it? Well, as we said all the time, we really don't know what's really happening, but we do know, we have a feel for what people are thinking about. And you could see today the market is just, like I said on Friday and on Sunday, that the market is looking for direction. It's literally blank. Why? Well, because it all depends. Is it about the economy? Is it about unemployment? Is it about what the Fed is going to do? Where is the market going to focus? Where the market is going to take its cue? That is the most difficult part. Because no one knows what people are thinking about. Obviously, we're going to wait to see what the CPI looks like. We're going to wait what the CPI looks like on the PPI on Tuesday, right? And then the CPI the day after. And then obviously if the CPI is high, then we're going to know the Fed is not going to lower rates. But more likely than not, with everything that's happening and the pressures they put on, the CPI is probably going to be lower. So therefore it's going to give people some comfort that the Fed is going to lower rates, which is kind of the expectation, so your mortgages are going to go down. But, if for whatever reason, A, inflation is not going down, that would be a big surprise, so something is going to happen in the market. Or B, the Fed decides, you know what, 25 bips, or worse, no change at all, because we're not seeing enough evidence. Then the concern is going to shift to what's going to happen to the economy. Do we have a problem with the economy? Because, if the Fed comes in September and says 1 basis point, whoa, we are in trouble. The Fed realized we're in trouble. So you don't know, right? But you need to educate yourself to know what all the things that could possibly happen. So you know the price point, right? Now, on Sunday, I did talk about an important topic. Now, of course, no one is talking about that topic, and these are the kind of topics I like to talk about. I like to talk about the topic that no one is talking about because it allows you to prepare yourself. And no one is talking about the national debt. But before I talk about that, before I forget, I want, because, I'm getting a lot of questions from people saying, from my subscribers saying, well, but how could I be a good predictor? How do I know what's going to happen? Do you need a certain degree? Do you need to be smart? What you need to do, you have to realize that the best ideas have come purely by luck. right? It's not like some smart guy decided to do. Believe it or not, most innovations have come by luck. I don't know if you remember the movie Jaws, right? I mean, it was the biggest thing there is about the shark and eating the people, and we still talk about shark to this day. We talk about this. Believe it or not, the only reason this movie made it big is because when Steven Spielberg was making the movie, he wanted the shark, but they realized that the shark is not working. It's a ridiculous thing. It was 1973. This thing is not going to work. It's going to sink on its own. Therefore, it's a mess. So he said, you know what? Let's not have a shark that much. And that's what made it scary. Because you never saw it. Or didn't see it as much. You thought about it. You imagined it. And that's what made this movie the way. And it was pure luck. The fact that the shark wasn't working. I mean, if you look at the end scene, you could see that it was kind of like really, you have to really believe in it, okay? So, and that's what happened. So what makes you a good stock picker or good making money in the stock market? You don't need a big degree. What you need to think. You need to think about what's happening. You need to think about the economy. And I'm telling you what's happening in the economy. You need to think about employment. And I'm telling you what's happening on employment. Employment is okay right now. It's going down, but everything is so down, but it's not dead. You have to think about the national debt, which no one is talking about it right now. The candidates are not talking about it. I'm going to show you a chart, right? I'm going to show you a chart which basically has to do with the bond auction. I talked a little bit about on Sunday, and it was a bit of a mess. It really didn't work well. Now I wanted to show you what happened. So when the U.S. government bond auction is announced, there's a new when issued bond starts trading, which allows the market to trade the new Treasury bond before the auction are completed. Such trading activity promotes price discovery. Where is it going to be? And allow the market to trade the government bond before it is available for sale. When the auction is completed, the yield between the when issued and the new bond, I hate to tell you, but this is education, is generally called the tail. Specifically, a 1 basis point tail means that the auction result was 1 basis points higher than when issued. Right? So what you want is, if the charts, basically the higher the score, the worse it gets. You don't want to see high tails, right? You don't want to see high tails? Well, I hate to tell you, I want to show you this chart. This is a very important chart. It could be a very important chart for the future. Look at this chart, okay? Don't worry too much about what it really means and what it's really calculating. All you care about is one thing you don't want to see is you don't want to see too many positive tails. And as you could see, in 2020, it was kind of, mostly negative. So people were buying the bonds. People were refinancing our debt eventually. But since 2022, look what's happening. We need help. We need help. We need help. Look at this. Look at this. Look at this. This, my friends, this might be something you need to worry about. This could be a problem in the future. Not tomorrow morning, not Monday, but if the government doesn't take care of this national debt, whoever comes becomes a president next year, they need to take care of this business. It's going to be very difficult because the only way you take care of this national debt is that you have to stop spending money, or you have to grow extremely fast, or you have to lower the benefits, or you have to extend when you retire. You have to do a bunch of things that are not very pleasant, and that's what no one is talking about. But tell me, nobody wants to talk about a virus that's going to close a country, right? But it did happen, and we did close a country. So please be careful about things you don't think is going to happen, and most importantly, be careful about things that no one is talking about. And for something like that, I would definitely protect my portfolio, right? Because right now, all everyone keeps telling you about, is it going to go up? Is it going to go down? Is it going to go up? Is it going to go down? So what do you do with a portfolio? What, you sell, you buy, you sell, you buy, you sell, you buy? which is great for them, right? Because they want you in the market. They want you active. So no, most of the people are not going to tell you to get out of the market. They want you in the market. But what people are really talking about is, yeah, but I don't want to sell my NVIDIA position, right? And then buy when everybody else is buying and sell when everybody else is selling. I don't want to do that. I want to make money when the thing is not happening. So what you do is you prepare yourself for something like that. You prepare yourself for the potential that we might not find enough people willing to refinance our debt. And if they don't refinance your debt, then you're in trouble. What does it mean? It means that then you have to cut benefits. Then you have to raise taxes. Then you have to extend your retirement age, and you have to cut the amount of retirement. A bunch of things that nobody wants to talk about. So what do you do? Therefore, you need to protect your book. Okay. So this is a strategy, a longer term strategy. So therefore, you can buy puts in the future. Look into it. Okay. Put options are not an easy thing to manage or understand, but you need to protect your book. You can't just be looking for immediate. No. In the more immediate term, what do we do? What do we do to make money? What do we do to take advantage of this market? Well, we might be slowing down. We already know that the techs are overboard. Yeah, I know you could tell a great story about NVIDIA, but the story has been told so many times that, okay, maybe there's money to be made there, but you know what? You probably want to find something that hasn't been discovered yet. And that is the reason why I want to talk to you about this stock called Consolidated Wall. I'm sorry, it may sound a bit boring, right? But that's how you make money. You make money with boring. You make money with the ability for you to be involved in a stock that no one has looked at it too much before, right? I remember this thing that I always do when you look at the let's take a look at the statistics, right? So this let's look at the summary. If I look at the summary, the market cap is 416, right? Right here, market cap. If I take a look at the financials and I say, hey, what is the ratio of the EBITDA, which is 47 million, right? 47.8 million divided by the summary. I'm sorry, I forgot again what it was. With a market cap of 416, that gives me about 11.4. And if I look at all my other names, Romaco, Miller, Vulcan, and Powell, and ACM, yeah, it's kind of in the range. Isn't that interesting? 11.4%. It's not 1.8% for that we have for our friend NVIDIA. So these names seems to be trading in an interesting range of valuation. And again, what we're looking here is basically dividing the amount of cash flow by the amount of market cap, which is kind of a yield, right? It's how much money you make versus how much money you invested, kind of. So if you get 5%, which is 4 or 5%, which is basically what the government is giving you right now, the 100 cents on the dollar, because it's safe and you're making 4% every time. So if you're less than 4%, like NVIDIA, you're saying, wow, I mean, that feels a bit heavy. Are you safer than the government? Really? So you want to be north of 4% right now, which you are with this name, which means that the name might be undervalued. But that's just my number, right? Don't take too much into it. What you need to look for is, okay, what's going on with this company? What's going on with the let's take a look at the P ratio, 12. Let's take a look at the beta, 0.17. Very, very, very does not follow the market at all. Very safe, very boring. Let's take a look at the financials. Financials, not that much boring. Take a look at this, 72, 66 million, 90. Let's take a look at investor relations. So we could look at some sort of a presentation. So we have a feel for what the company is doing, right? So events and presentation. I like to look at the events and presentation because it gives me a good feel for what this company does. Okay, so it trades on the NASDAQ, right? So right now we are we're 27 where the lies were 38. Not too much insider institutional is 60%, which is kind of heavy. Revenue is 187 million. There's more to go. Cash is $46 million in cash. There's some yield. Founding in 1973, so lots and lots and lots and lots of time they've been in business. Look at manufacturing, services, bulk, and retail. Where are they making their money? Where's the growth coming from? Not the retail, not the bulk, but from the servicing. And obviously servicing is great because you're just offering a service. I know, it sounds stupid. No, you're offering a service, you make more money. That's the point. You're just servicing someone. You're not building and then selling. Building and then selling. That is too complicating. Retailing, buying from someone, selling to someone else. No, servicing. That's where the money is. That's where the growth is. That's where is the look, service. 59% of their business, which is a great way to be. Some retail, some bulk, and some manufacturing, but mostly servicing. Okay, but they're diversified around 4 business segments. What do they do exactly? Well, they have exclusive license with the government to operate a water facility. Now, this is not just in the Caribbean. Okay, so take it easy. Hold on, let me show you. They produce and water to 89 residential. They're serving 2 to 3 most populated rapidly in the Cayman Island, right? So that's what they do for there. Now, they also have a manufacturing segment and specialized expertise. OEM equipment for municipal water treatment. This is all ESG and industrial water, city water. Provides a platform for further penetrating the lucrative U.S. water and wastewater market. I know you have never heard of this company, but that's the point. You don't all want to be buying Nvidia. You need to buy someone that no one else is buying. That's how you make money. You buy when no one else is buying. Or when they're selling. In this price, nobody's selling, but nobody's buying this stock that many times because, it's kind of a boring thing. But at the end of the day, they seem to be doing pretty well for themselves. Look at this. Advanced Water Services. What do? Hey, notice this is Southwest U.S. So they're also in the U.S., right? They provide advanced water services in the U.S. They develop, design, build, operate, and maintain water waste treatment across the southeastern U.S. They have synergistic product. They obviously they got some awards, so they know what they're doing. 22 years in business. REC acquisition, borders are present, water stressed region. So they're doing acquisition. That means they have money. They've acquired. What does that mean? What are they buying? They're buying Rocky Mountain Water Environment Association, State of Colorado. What they're buying is helping municipal district comply with environmental regulation and properly manage their precious water. When you drink water, you think, well, it must be good. Have you ever tested water? Tasted it and tested it. Let me tell you, you'll be surprised. We're in Pennsylvania and we tested the water. It wasn't that great, even though the government says, okay, you could drink it. Not really. Okay, so they help you. They help the treatment. It's important. It's valuable. People will pay. They also have U.S. desalination where they remove the salt from the system, right? And that thing is growing at 8.3% a year. We're drying. There's less and less water around. This is going to be very helpful. This is going to grow. In fact, it has grown from 2022 to 2028 from 1.6 to 6.8, 2.6 billion, 8.3% CAGR. U.S. scarcity of freshwater reserve coupled with rising demand in California, Florida, and Texas, very hot state. They help reverse osmosis technology grow due to low insulation. Reverse osmosis, basically what they do is, they take, if you could buy a reverse osmosis system in your house to clean your water, right? It passes through a bunch of filters to remove the impurity, the taste. They have 2 contracts to operate water facilities. That is what's important. You know why? Because that's a servicing. And who are they using it for? Operate wastewater at Air Force Base. That's right. What are these people drinking? Before they fly in that plane, they need to know what they're drinking. They are providing safe environment. The city, they're providing water treatment. There's lots of cities. Revenue, $2 million a year, $3 million, 1.3 every year. This is fantastic. Then they have a 204 million seawater desalination project in Hawaii. Obviously, Hawaii needs water. $204 million in revenue over the next 24 base term. So you need water every day, right? Recurring revenues, people. This is fantastic. Recent consolidated water win, 20 million desalination plant in the Caribbean, in the Cayman Island. Acquisition strategy, obviously they've got lots of cash, so they could afford to be buying a bunch of people. They follow the same successful approach with previous transaction, utilizing our ample cash on hand. They're doing acquisition. They're diversified. They have a product that is very, very important that everyone wants. And they're servicing. All these key terms give you a feel that this thing is growing. It gives you a feel that there's value in this. This thing is not going to disappear tomorrow. And on top of that, nobody's looking at it. You want someone that is not looking at it. You don't want everybody on top of your NVIDIA. Enough of NVIDIA. Right? Buy something else for a change. Right? So they are based, and these people seem to be a great bunch of people. They give you the balance sheet. So at the end of the day, what you want to do is you want to get involved in a company that's going to provide you information, that's going to be helping for you. Remember, education is key. Remember, don't try to predict the market. And at the end of the day, for you as an investor, you need to kind of decide where we are in this market. You have to decide not so much what is happening, but what the market thinks is happening. That is more important. And on top of that, you need to protect yourself against any downside. And the downside could come from anywhere, right? Because remember, right now what we're saying is, A, the economy is slowing down. We don't have a recession, right? Do we have a recession right now? Well, you're not going to know that by just looking at the unemployment number. Let me show you the state of the economy. You want to see the state of the economy? That is very easy for me to show you. Look. Okay? Indicators as of August 10th. If you look precisely at our daily data, right? Weekly is telling us you guys economy. Daily data, restaurant booking is strong. Air travel is still strong. Retail still strong. Jobless claims slightly weaker. Hotel occupancy strong. Bank lending growing. Bankruptcy trending lower. You understand what's happening. But more importantly, like I keep saying over and over and over, you need to understand what you are buying. Remember that is extremely, extremely important. I will see you in my next video to see what happens with the PMI and what's happening with the CPI. My guess is that it's going to be positive news and the market is going to rally. And we've got some great position for it. So we'll see you. Don't forget, subscribe and like what you see.